Welcome to all the participants to this edition of webinar. As I mentioned earlier, this is a path-breaking decision taken by the GST Council in reducing the rates of tax for various items. To be frank, I never expected this type of bonanza will come to the common man, because there was always a question, what the government has done for the common man, what the government has done for the people at large. So these are the questions that was raised. And also, the consumption is going to get boosted. That will be the hallmark. That is the people they say. But there will be some benefits to the people at large. And for example, when the income tax rate was reduced from the peak 45% or 50% to 30% by the then finance minister, Mr. P. Chidambaram, he told the lower rates will bring in more revenues. People will become more compliant. So the compliance will be easy. So on that front only, in a similar move, the rate of tax for the goods that will be used by the common people have been reduced drastically. The rate of tax for common people usage like soap, paste, and then shampoo, all these items, the rate of tax has come from 18% to 5%. It is a very, very welcome move, I would say, because originally these items at the time of introduction of GST were taxed at the rate of 28%. See, there is a committee called Fitment Committee in the GST Council. Fitment Committee only recommends at what rate these items should be taxed. So in the initial stages, why they went in for 28%? Because that time we had 12.5% as the central excise duty, then 14.5 as the VAT. So this will contribute to nearly 27. Then in addition to that, if there is CST, central sales tax was there. So all these were combined and then it was fixed at 28%. But there was a huge hue and cry against this 28%. So government immediately reduced that to 18%. So even I was very much apprehensive. There will be a drastic fall in the GST collections because of the reduction in the rate of tax from 28% to 18%. That too of the consumption, huge consumption base. So that was my I would say it is a pessimistic view. So because of the reduction, the government may be losing, because all along they have been collecting at the rate of nearly 32% was the combined effect of the tax on central excise plus CST, and then because on the combined value only VAT will be levied. There will be tax on tax. So it nearly came to 32%, but it was reduced to 18%. But the subsequent collections show that there has been a buoyancy and also increasing trend in the GST collection. So the people are asking, so much of lakhs and crores every time, nearly 1.5 lakh crores or last month 1.86 lakh crores. So much of collections are happening. What is the benefit we are getting out of that? So this was the query raised. So to answer that, yes, we will be giving to you some benefits in the GST. That was the announcement made by the Prime Minister in his speech also on Independence Day. So keeping in that view, the reduction in the taxes have been announced. But how they will be managing their own finances, it has to be seen. So this is in this background, we have to see what are the items for which the rate of tax has been reduced. To keep the momentum and then to bring it to the notice of all the participants of this webinar, I asked Aravind Tangam to present a small PPT on the rate of tax changes and it will be what will be the effect on the general people and overall. With this, now giving to the Arvind Tangam for his analysis of the GST Council decision. Before going into that, I shall say one thing. See, this is the as soon as the GST Council is over, they propagate or they give a small maybe 5 to 10 pages. But this after this 56th GST Council, their brochure is nearly 80 pages. They with the HSN wise and also sector wise they have given. In that bottom you will find this is only for the purpose of giving the details of the what happened in the council meeting. Everything will be binding only as per the notification. So whatever Arvind says will be only on the basis of the GST Council notice given after the council meeting is over. But the detailed analysis can be done only after the relevant notifications are given by the government, because this notification will be having a much more detailed reasons or the correct rate of tax under HSN ways, they will be correct. There will not be much of change. But with this disclaimer, let us go into the details analysis of 56th GST Council meeting decisions. Thanking you for all your continued support. Now it is over to Arvind Tangam for his presentation. Thank you one and all. It's over to you, Arvind.
So very good afternoon to one and all. It's extremely a pleasure to connect with you through this session of Zen Tax Talks and on a very, very special day. Today happens to be a lot of celebrations, not just with respect to Zen Tax 2.0, but on a lot of occasions. Today, the 5th of September, being Teachers' Day for that matter. Number two, the people, our fellow brothers and sisters from Kerala celebrating Onam, which is their very special event for the entire year. Our brothers and sisters celebrating Miladi Nabi.
On.
Am I audible a little bit better? Yes. So, right. So, okay. So today celebrating Teachers' Day, Onam, Miladi Nabi, it is extremely a pleasure to invite you all to this 88th session of Zen Tax Talks, wherein we talk about GST 2.0. GST by itself was a very groundbreaking reform in the country, and I would definitely say that this GST 2.0 has been a fitting tribute given by the government to the people, the business community, and the consumers at large for having supported GST so far. In so many countries, the implementation of GST has been a failure for various reasons. But India, we made GST a success thanks to the wonderful support from the business community, the consumers who have adopted and accepted the entire concept of GST, and also the professional community who have together made sure that GST was always a success. Now, this GST 2.0, the reduction of GST rates, or to call it the rationalization of GST rates from the existing structure of 5 rates, 0, 5, 12, 18, 28, people always felt that it had been a very complicated system to arrive at the correct rate of GST for the various goods and services. Now, with this rate rationalization, which was long pending for a much longer time, this has been a very wonderful moment to celebrate the various rate reductions for various goods and services. So, this rate reduction, as our senior CAP Paul Tangam had very clearly explained, that this has not still come into effect. This is only a press release that has come immediately after the GST Council meeting. We still await the GST notifications, which will formally, officially give effect to these rate changes. But to bring it to you first on what are the rate changes and beyond what are the rate changes, because everyone by now have got very much familiarized with what are the products that actually have got benefited because of the rate reduction, but at a more larger level, what really happens. So to move forward with the presentation, கற்றது கைமண் அளவு கல்லாதது உலகளவு. We are sharing the little that we have read and interpreted based on the legal provisions, and whatever are your interpretations, whatever are your own thoughts, we are always glad to listen to the same. You may please post your questions onto the comment box and we will take it up as things really move forward during the course of the presentation today. Right? So commemorating Teachers Day, it is also a very fitting moment to really say that Mata, Pita, Guru, Deivam. This is from the Tamil literature, wherein the first and the foremost regard and respect to the mother, then to the father, then to the teachers, and then to God. Such is the importance of teachers which has been given in the Tamil literature, and following which our sincere thanks to all our teachers throughout our entire journey. From the entire Zentax team, we thank all our teachers for having bestowed us with so much of knowledge that has been a continuous sense of learning. And to you, the active participants of our Zentax Talks. Zentax Talks, to be very open with you, has been the biggest motivation for all our expert team members to continuously learn, update, challenge ourselves. An update that came day before yesterday, we are back, we are here with a complete presentation. It is all thanks to you, the participants of Zentax Talks, who have made it always to our sessions and which keeps us pushing to us to continuously learn. So all the participants of Zentax Talks today and for all the 87 sessions in the past have always been our teachers, and we thank each one of you for your continued patronage. And this has been one of the sessions where we have the highest number of record participants, and we thank each one of you for being here with us in this 88th session of Zentax Talks, wherein we talk about the analysis of the 56 GST Council meeting. Special thanks to my mother and my father and the senior partner who was also here just to give the opening remarks for this session, for having always imbibed the value of continuous learning. And today we, all of us together, are very thankful to them for on this Teachers Day celebration. A very happy Onam and happy Miladi Nabi to all our fellow brothers and sisters, and we move forward towards the session for discussion today. So GST in daily life. Before we really touch upon the impact on the businesses, the impact on various sectors, and the various procedural aspects that we need to do, let me just take a couple of minutes to discuss about what would be the impact on me as a common man. Because as a professional, as a businessman, it could be very different. But as a common man, in my daily life, what does this GST 2.0 actually make an impact on? This GST 2.0 has made substantial reduction in rates of GST for multivarious products and multivarious services. Thereby, in my individual opinion, say for example, a person earning a salary of around rupees 1 lakh per month will easily save up to rupees 4,000 per month in GST. And the learned audience, all of you will very clearly know, starting from this financial year, that is the financial year 25-26, up to an income of rupees 12 lakhs, there is no income tax also. So in a very generic sense, a person earning rupees 1 lakh as salary, that is 12 lakh per annum, will net to net pay a tax of rupees 60,000 to the government at the very max, and not anything more. No income tax, nothing more in GST. What has really contributed now in this GST 2.0 for a substantial rate reduction from almost rupees 9,000 to 5,000? The first and foremost is with respect to the complete exemption given with respect to life insurance and health insurance. Yes, my dear friends, the finance minister of all the respective states and including the union finance minister has well heard of the various things that we have been discussing on social media. And I thank all the fellow members over here for actively contributing on social media, where there have been a lot of criticism with respect to the GST rate applicable for life insurance and health insurance. The GST rate for life insurance and health insurance was 18%, which was a very basic necessity, and consequent to this GST 2.0 rate revision, this has now been reduced or fully exempted, and thereby there is no GST applicable for life insurance and health insurance. Thereby, anyone who spends, say, rupees 10,000 rupees on life insurance and health insurance directly by himself or indirectly through the company would save an amount of rupees 1,800 directly with respect to the GST component. The second of that could be with respect to the daily essentials, for which, for a common man, very much like how our senior expert CAP Paul Thangam mentioned, the press release has very clearly brought out what is the benefit of GST for a common man. All the daily usage items, there have been a substantial reduction in rates. Subsequently, even with respect to the purchase of various electronic items, say for example, you want to buy a dishwasher for your home. For the summer season, you want to put an air conditioner for your home. You want to buy a car. GST on all these elements have been reduced in this GST 2.0. And therefore, I would confidently say that across these 24 sectors for which GST has been reduced, we can very comfortably say that at the very least, 4,000 to 5,000 rupees of GST would definitely get saved. And that is the biggest savings for a middle class person, for every person for that matter, for each of us. And when there is no income tax also up to rupees 12 lakhs, both these together contribute a substantial tax saving for all individuals. So now talking about the rates for the various industries that have been rationalized, the beautifully categorized the rate reduction into 24 sectors: the food sector, the tobacco, agriculture sector, fertilizer, coal, renewable energy, textile, health, education, common man items, consumer electronics, paper sector, transport sector, sports goods, dutiable articles for personal use, leather sector, wood sector, defense, footwear, miscellaneous, construction sector, handicrafts, other machinery, and other proposals. So across these 24 sectors, we have rate reductions, which substantially benefits the business at large and directly benefiting the consumers as well. So to move forward, as to give a word of caution, as our senior partner CAP Paul Thangam, senior expert, had very, very clearly mentioned, the recommendations of GST Council have been presented in this press release containing the major item of decisions in simple language for information to stakeholders. The same would be given effect through relevant circulars, notifications, or law amendments, which alone shall have the force of law, and therefore whatever we discussed today is based on the press release that has come as a result of the 56th GST Council meeting, and that alone does not have legal binding. We will have to await the issuance of the notifications, circulars, or the amendments to the GST Act, which will only have the actual impact. So when we talk about the analysis of the change in the rates, it is not only to know what changed. What changed with respect to the GST rates, you have it all there. We have circulated very, very quickly on the same date, immediately after releasing the press release, before midnight. Immediately on receiving the change, we had updated on our WhatsApp channel and on all our social media to say what has got changed. But beyond what changed, we need to know what we need to do if any of our goods have undergone a change in the rates. Number 2, when does these changes actually come into effect? Has the changes actually come into effect, or are we waiting for it? It has already been mentioned now that we are still awaiting the issuance of the notification. So assuming the notification comes immediately after the session, immediately gets closed by. So will the rate changes come into effect from today itself or from tomorrow, or what? From when will these notifications come into effect? And the transactions which are already in progress. I am supplying the goods regularly. I am yet to raise an invoice, or I have received an advance already in the last month. Now I am yet to only make the supply. What happens to all these transactions? These are some practical aspects that needs to be understood whenever there is a change in rate, and those are some aspects which we would be discussing in detail during the course of this session. The major concern comes with respect to the MRP products. Products for which MRP is already printed on the products. What happens to those products? When there is an increase in the rates, can I change the MRP sticker? Is it very practically so easy to change the MRP sticker? Does the law allow to change the MRP sticker? Because the stock could be actually not only with me, but it could be lying at the stock point of my wholesaler. It could be stock point of my retailer or in my own warehouse as well. Am I allowed legally to alter the MRP sticker or the MRP which is already printed on the packaged commodities? If there is a reduction in rate, even there as well, is it a mandate that I should alter the MRP? We had during the introduction of GST some terminology which we call it as the anti-profiteering clause. That is, the result of rate reduction in GST needs to be passed on to the consumer, and therefore there was a special authority in the format of the anti-profiteering authority who, based on a complaint, can verify if at all the benefit of GST rate reduction has been ultimately passed on to the end consumer. So today, with substantial rate reduction in across the 24 sectors that we had been seeing in the previous slide, should we be worried about the anti-profiteering authority? Is it a mandate that we reduce the GST rates, that the MRP prices? This is a very important subject that I would like to discuss in detail about today. Then, during the course of the last sessions, last slides, you might be able to see that for many items for which the rate was prescribed at 5, 12 or 18, now the rate has been drastically reduced to 0. That is, it has now come to the exempted category. Those goods which were already taxable has now fallen under the exempted category. Whenever goods are falling under the exempted category, the learned audience would very well know that there is the requirement for reversal of input tax credit for exempted supplies, which is provided for in Rule 42 of the CGST rules, read along with Section 17, subsection 2 and 17, subsection 3 of the CGST Act. So this is with respect to the goods for which the rate of tax has been made 0, that is into the exempted category. Supposing for various items where the rate of tax has been reduced from 18% to 5% or from 12% to 5%, can the business take the benefit of inverted tax structure? Under inverted duty structure, we will be eligible to claim a refund of tax when I have paid a higher rate of tax on my inputs, but my output is subjected to a lower rate. So can I claim a refund of my inverted tax structure is one important question for the trade and industry, and for which we would definitely be clarifying during the course of this session. And the working capital impact of the increase in the rate of input or output supplies. So starting with this point as of now, I will just like to explain that the change in the GST rates should not be looked into only and only with respect to my outward supplies. I need to look at the change in rate for my inward supplies also. So the rate of tax, when we analyze the press release today or the rate notification as it comes by, should not be restricted to only the change in my outward supplies. That is what I sell, but I should also keep a track of, and I should also analyze the change in my purchases also, because the change in my purchases can impact my working capital. The change in my purchases can impact my profitability also. That is in a very, very simple level. Say, for example, I was buying goods at say rupees 100 plus 5 rupees of GST at 5 plus 5% of GST at 105. If I wanted to sell the goods at a profit of 2%, I would be selling the product at 102 plus 5% of GST, which would eventually be somewhere around 106 rupees. But today, supposing the goods are moved to the exempted category, then the pricing of such goods needs to be very carefully looked into, that the cost price of the goods is not 100, but the cost price of the goods become 105. So this is a very important aspect that businesses needs to understand at the time of pricing, particularly with respect to rate reduction, or more so particularly when the goods have moved from a taxable commodity to an exempted commodity. That is generally for pricing purposes or for cost analysis purposes, for profitability, we do not take the GST on my purchases as a cost, because we are eligible for the benefit of input tax credit. But whereas when the goods are treated as exempted, then if at all I am purchasing the goods as taxable and then supplying it under the exempted category, which can be also the case in selected situations, then in my purchases, the GST component also needs to be taken as a cost, and only then the product can be sold at a profit. So this is one of the important aspects that needs to be looked into whenever you are looking or whenever you are fixing the price for exempted commodities. So today, during the course of session, what changed, I would be discussing only about these 8 segments, that too not on each of these line items. So for if you have any specific clarification on any of the specific line items, we would definitely take it up during the course of the question and answer session, or also even after that you may reach out to our expert team who will be the right people to guide you on what is the actual change. But whereas during the course of today's session, we would touch on brief about what changed, but more so on the impact of things. So how do you give effect to the GST rate changes? So the first and foremost, to give effect to the rate changes is that you need to change the rate of tax in the ERP system that you use. It can be any of the systems that you use. It can be Tally, it can be any other Prime ERP, it can be Odoo, it can be SAP, it can be Oracle. Any software that you use, please make sure that you give an effect to the rate changes in your billing or whatever is the ERP system that you use, your invoicing system basically. Then not only in your system, but supposing you are a manufacturer and you are selling the goods across a supply chain, you need to make sure that the pricing list is revised across the supply chain. Say for example, you are a manufacturer of air conditioner, LG air conditioner. LG air conditioner, they would give a price list to their wholesaler, and the price list will also be available to the dealer or the retailer. In which situation now it is very important that businesses get ready with a revised price list for the pricing after the change in rate. So after the change in rate, whatever is the new price list, that needs to be also made ready before the actual date of change. Now, what is the impact? for the goods that I have already purchased or the goods that is already lying in the entire value chain. In the entire supply chain, if I already have goods, what is the impact? That is something which we need to very specifically study, for which you need to arrive at the value of stock in each of the HSN line items. For each of the HSN line items, you need to know what is the stock that you already have and make a very important plan before the change in rate. If you have to dilute such goods, sell those goods, or actually give it away even at a discount today itself. Should you stock and sell? Should you sell immediately now? Has to be a very conscious decision that needs to be made with respect to all those goods for which there is going to be a change in rate of tax. Not only with your outward supplies, but also with respect to your inward supplies. Just a moment. Thank you. So not only with respect to your outward supplies, even with respect to your inward supplies, whether it is with respect to your purchases or whether it is with respect to your capital goods, we need to definitely check out whether the revised rates are being given by my suppliers. Because if your supplier does not give you the benefit of this rate reduction, then there as well, it can be a problem. Right? Then all the purchase orders which are in your system, which is going to be pending on the transition date, you need to check into it and make sure that you give a revised purchase order, because your purchase might be coming at a new rate. There might be a difference between the existing PO in your system and the new purchase invoice. Then the cess, the applicability of cess, which we call as the compensation cess, which was applicable, say, with respect to motor vehicles, say, which was applicable with respect to coal, those are now being removed. Therefore, if any of the businesses have any balance with respect to compensation cess in their electronic credit ledger, then that needs to be very carefully reviewed, because going forward, the GST rate is going to absorb this cess rate also. There is not going to be any more cess applicable. Therefore, to give effect to the GST rate changes, because all of you would definitely know what is the change with respect to your particular rate of tax for your goods, which we would also see with respect to the 8 important sectors today. Balance sectors, which we would be discussing in the forthcoming session in part 2 of Zen Tax Talks anyways. So it is not just about knowing what is the change in rate, but also to actually and practically give effect to these rate changes. So what is the date? What we call as the golden date, when the new rate of GST is going to come into effect. The new rates are going to come into effect from the 22nd of September 2025. So there is no suspense. It is not any thriller movie at all. On the date of the GST Council meeting, it was definitely like a thriller meeting. It was definitely like a thriller where we were awaiting the result of the GST Council meeting only on Thursday, that is yesterday. So we were expecting the GST Council meeting was across 2 different dates, that is on Wednesday and Thursday. We were expecting the press release and the various outputs to be given by way of a press release on Thursday. But on Wednesday night itself, we got the press release and came to know about. So the thriller, which should have been kept till Thursday, got released on Wednesday itself, giving a lot of relief to the trade and industry who are looking for a lot of relief at this point in time. With the Trump tariff also being into effect since the last week of August, it has always been a very unsure environment for the businesses at large, because of the imposition of 50% of tariffs for imports into USA. Now, with this rate reduction under GST, India is set to step up its own domestic demand, thereby to offset, at least not to even offset, at least minimize the impact of the Trump tariff and stay strong that India will not bog down to any of the threats by the US government at this moment. But we will have to wait and watch on what is going to be the political change, the geopolitical situation that will really change off due to the Trump tariffs. But anyways, this GST rates has been a very, very welcome move. So to explain on this slide, and also in the immediately forthcoming slide, is that what will be the GST rate that will be applicable if I have done a part of my transaction before the change and a part of the transaction after the change. So there are three important activities to be seen. One, what was the date of supply? Number one. Number two, what was the date of issuance of invoice? Third, what was the date of receipt of payment? Time of receipt is not the time of receipt of the goods, but the time of receipt of payment. Let's take one situation that the goods have been supplied before the 22nd. That is, on or before 21st of September 2025, the goods have been supplied. The invoice is issued after the 22nd of September. The payment by the customer is also made after the 22nd of September. That is, you are receiving the payment after 22nd of September. Then the time of supply will be the date of receipt of payment or the date of issuance of invoice, whichever is earlier. Supposing I have issued the invoice on the 22nd of September, the payment is received on the 30th of September, 22nd of September is the time of supply and the new rate will only get applicable. Supposing I am receiving the payment on the 22nd of September, I am issuing an invoice on the 30th of September. Even then, 22nd of September is the new time of supply and the new rate will only be applicable. On the contrary, I have already supplied the goods before 22nd. I have also issued the invoice before 22nd. Only I am receiving the payment after 22nd. Then only old rate will be applicable. One more situation is that I have made the supply before 22nd. I have received the payment also before 22nd. But since I come to know that the GST rate has got reduced, I am only issuing the invoice after 22nd. Can I take the benefit of the new rate? No. Only the old rate will be applicable is what is very clearly provided under law. So in respect of goods for which the goods have already been supplied, the payment has already been received. Just because you are deferring the date of invoice does not give you the right to raise the invoice at the new rate. It shall still be raised only at the old rate. Supposing the goods are supplied after 22nd, there as well, if I have already raised an invoice before 22nd, if I have already received the payment before 22nd, then as well, only the old rate will be applicable. Let's take a practical situation. The press release came on the 3rd of September. One moment, just a moment. Okay. So the press release came on the 3rd of September, right? The GST Council meeting was on the 3rd of September and we got the press release also on the 3rd of September. So on the 3rd of September, I have raised an invoice. Let's assume it's also an e-invoice as well. I have received the payment for such an invoice, but the goods were set to be loaded only around, say, 11 p.m. midnight for dispatch, right? So the goods were not loaded because you came to know that the supply is anyways that you can get the lower rate. but you have already raised the invoice, you have got the payment also. So the customer says, sir, don't send me on 3rd. Wait. You send it to me on 22nd. Just because of this, can he get the benefit of the new rate? No. The time of supply provisions under GST very clearly provide that if two activities has happened already, that is the time of date of issuance of invoice, the date of receipt of payment, both has happened before the change in rate, then only the old rate will be applicable. Supposing that you have supplied after 22nd of September, you have received the payment also after 22nd of September, but just because you have raised the invoice before 22nd of September, no worries at all. Still, it would be applicable under the new rate only. The revised rate of, if the rate is reduced, then only the revised rate will be applicable. The other situation is that I made a supply after 22nd of September. I raised an invoice also 22nd of September. Today I have received the advance. Will I be subjected to the old rate or the new rate? Only the new rate will be applicable. Right? So this is how you need to check into the rate of tax. What is the date? Next, can I practically or can I legally issue an invoice after the change in rate where I have already supplied the goods before change in rate? I am supplying the goods today. Can I raise the invoice on 22nd? Is that legally allowed? Because generally now the businesses would be having their own thoughts of structuring the transactions, because business cannot stop. You need to supply, but the customer will not agree for the higher rate of GST. Therefore, there can be a very common understanding that between the supplier and the recipient, I will raise the invoice on 22nd at the new rate, which is the reduced rate. Is that allowed? What is the time limit for issuance of an invoice? I refer to section 31 of the CGST Act, which provides a registered person supplying taxable goods shall, before or at the time of removal of goods for supply to the recipient, issue a tax invoice. Right? So the issuance of a tax invoice has to be before or at the time of removal. Therefore, though the legal provision with respect to time of supply provide that the invoice is issued at a much later date, in a legal perspective, section 31 very clearly provides that invoice shall be issued before or at the time of removal, not at any time later. Therefore, just merely deferring, delaying, postponing the issuance of an invoice for the purposes of GST rate reduction will not be fit and proper under law. How will the department come to know about it? During the course of departmental audit or inspection, definitely these are aspects that would be taken up. Therefore, if at all you want to raise an invoice, if at all you want to supply the goods, make sure that you are supplying with an invoice. Sir, but even otherwise, I have a system where I am continuously supplying goods to a particular person. Should I raise the invoice under section 31 subsection 1 for each of the movement? No. The law very clearly provides under section 31 subsection 4 to say that in case of continuous supply of goods, where successive statement of accounts or successive payments are involved, that is, it is not the payment with respect to a single transaction, but with respect to a bulk of transaction where periodical payments are being made, then the invoice shall be made before or at the time each such statement is issued. If you are going to give a daily statement, then daily invoicing needs to be done. If you are going to give a monthly statement, a monthly invoicing can even also be done. Or if you are going to give a weekly statement or a fortnightly statement, such fortnightly or weekly invoicing shall also be allowed under law as per section 31 subsection 4 of the CGST Act. Right? Therefore, with respect to continuous supply of goods, we have the option of doing this. Beyond all this, beyond what section 31 subsection 1 says, beyond what 31 subsection 4 says, we have the provisions under 31 subsection 7, which starts with a non-abstent clause. A non-abstent clause has an overriding provision over the other provisions, notwithstanding anything contained in subsection 1. Subsection 1 very clearly goes to say that invoice has to be issued before or at the time of removal. But notwithstanding anything contained in subsection 1, where the goods being sent or taken on approval for sale or return. So whenever it is sale on approval or return basis, then the invoice has to be issued before before or at the time of supply or 6 months from the date of removal. Subsection 1 goes to say that invoice has to be issued before or at the time of removal, but whereas in the case of sale on approval basis, you have a time limit up to 6 months for raising of an invoice. This can be one beneficial provision which can be interpreted by the trade and industry for the movement of goods between 3rd of September and between 22nd of September, but that needs to be also exercised with due caution. Now coming to the impact on the MRP products. Can I alter the label on the MRP products? Let's take any product for that matter. We will look into the various items. Let's take, for example, paneer, cheese, or any product for that matter, where the rate of GST has been substantially reduced. Can I alter the MRP? Where does this MRP regulations come out of? The MRP regulations are contained in the Legal Metrology Act, and which is supported by the Legal Metrology Packaged Commodity Rules of 2011. These Legal Metrology Packaged Commodity Rules, we have a specific rule in rule number 18, which applies to wholesale dealer and retail dealers for everyone together. No wholesale dealer or retail dealer or other person, so anyone, shall obliterate, smudge, or alter the retail sale price indicated by the manufacturer or the packer or the importer, as the case may be, on the package or on the label affixed thereto. So on the package or on the label, whatever is the price shall not be altered by any person. The manufacturer or the importer shall not alter the price on the wrapper once printed and used for packaging. So subrule 5 talks about the subsequent persons in the supply chain. Subrule 6 talks about the manufacturer or the person themselves shall also not alter the price once it is printed and is used for packing. Now what happens? I have goods which I have already packed. GST rate has reduced. Is it mandatory that I give the benefit, or can I continue with the same retail sale price? So given all these things, we refer to first and foremost the press release given by the Ministry of Consumer Affairs, Food and Public Distribution. Multiple press releases have been given since the implementation of GST and even before that. But from the implementation of GST, many press releases have been very specifically given to give effect to the implementation of GST phase number 1. Number 2, there has been very similar rate reductions happening even before this GST 2.0 in multiple occasions. To give effect to all these situations, we have now this, I refer to this press release which says that when government reduced the rates of GST on certain specified items, the permission was granted under sub-rule 3 of rule 6 of the packaged commodity rules to affix an additional sticker or stamping or online printing for declaring the reduced MRP on the pre-packaged commodity. So in this case also, the earlier labeling or sticker of the MRP will continue to be visible. So say for example, if there was already an MRP which was printed, now you want to increase or decrease whatever be it, you need to paste a separate MRP sticker but not over that existing MRP. The existing MRP still needs to be continues to be visible. So this relaxation is also applicable in the case of unsold stocks manufactured or packed or imported, where the MRP would reduce due to reduction in the rate of GST, that is with effect from 27th of July 2018. This is the last press release. Now that with effect from 22nd of September 2025. Any packaging material or wrapper which could not be exhausted by the manufacturer or packer or the importer may also be used for packing or material up to a specified date which was provided. So therefore, you already have a packing material which has the old MRP printed. Even then, that could still continue to be used because some relaxations have already been given in the past on very similar lines. Therefore, if you want to change the MRP, put a separate sticker, not over the existing sticker. Can you use the existing packaging? Yes, you can still continue to use the existing packaging. Continuing the same discussion with respect to MRP products, is there the applicability of anti-profiteering? That is it mandatory that the business passes on the benefit of this rate reduction to the ultimate consumers? We bring notification number 19/2024 dated 30th September 2024, which was issued last year, to the August audience over here, which talks about this anti-profiteering element. The GST Council, on the recommendation of GST Council, the notification says that after the 1st of April 2025, the anti-profiteering authority shall not accept any application at all, any request for examination, whether the reduction in the tax rate have actually resulted in a commensurate reduction in the price of the goods or services or both supplied by that registered person. So before 1st of April 2025, we had that situation that when the GST rate was reduced from, say, 12% to 5%, that commensurate reduction of 7% need to be passed on to the end consumer. That requirement was there, and that was supported by the anti-profiteering authority or the anti-profiteering provisions contained in the GST law. But after the notification number 19/2024, which has come into effect from the 1st of April 2025, we sitting today in the first week of September 2025, we can very safely say that anti-profiteering rules or the anti-profiteering guidelines, the anti-profiteering laws will not apply for this rate reduction, and therefore will be based on the business competition. But still, as a responsible business, it is important that businesses pass on the benefit of this rate reduction to the ultimate consumers. So responsible businesses, it is extremely very important that businesses take this effect to the end consumers, because that will greatly improve the entire volume game. The reduction in GST could be an additional profit, but still that could reduction in MRP and the pricing can definitely impact the long-term value game for each of the products. Then also about an impact of ITC reversal for change in taxable to exempted. Supposing for various goods that we would now be discussing now very shortly, there has been a change in the taxable commodities to exempted commodities. Now, because it got exempted, but I now purchased it with tax, can I claim the benefit of this ITC? Or is it required that I have to reverse this input tax credit? The government came out with an FAQ, which has been shown in the PIB website as well. The FAQ very clearly clarifies that ITC can be claimed up to the 31st of September 2025. But for all supplies made on or after 22nd of September 2025, it has to be treated as an exempted supply and ITC has to be reversed as per the provisions of law, which is nothing but 17.2, 17.3 read with rule 42 of the CGST rules. Therefore, the requirement of ITC reversal will definitely be there for all those goods which have got changed from taxable to exempted. How do we mitigate the impact? As I had already told you, take into account the value of stock that you have as on the changing date. Do minimize the stock that you really have so that the impact of this change can be mitigated. The eligibility of IDS refund for the reduction in rates. This is another common question which has now been raised. Sir, I am buying the goods at 18%, but after 22nd of September, the rate of tax has been reduced to 5%. Therefore, the additional GST that I have now paid, can I claim that refund as inverted duty structure? The question reads in the FAQ that, will I be allowed to take a refund of accumulated credit arising out of inverted duty structure for supplies effected up to the date of effect of revised rate as notified? The said issue has been clarified when Circular number 135, they refer to an old refund circular. Circular number 125 is the master circular. Circular number 135 is also very comprehensive and important circular under GST issued in the month of March 2020. This circular issued in Circular number 135 had already very clearly clarified that where the credit of GST has accumulated due to a reduction in rate of GST, then they have clarified that this does not fall under inverted tax structure, and therefore you will not be eligible to claim a refund under inverted duty structure. Can this provision of law issued through a circular as a clarificatory amendment, as a clarification, will it hold good or can it be challenged? Yes, it still can be challenged, but this circular is something which is very important for the interest of the august audience over here. So talking about the various food changes, let me just show you the various changes with respect to the food sector. 4 items on which the rate of tax was 5% has been reduced to nil. Some 18 items on which the rate of tax was at 18% still now. Sorry, 1 item for which the rate of tax was at 18% has now been made nil. That is with respect to parota, chapati or roti. For 47 items, the rate of tax which was at 12% reduced to 5%. For 23 items, the rate of tax which was at 18% reduced to 5%. Only for 1 item, the rate of tax has been increased from 18% to 40%, that is with respect to non-alcoholic beverages. For 4 items, the rate of tax has been increased from 28% to 40%. Let me just show you very quickly on this rate notification only. On this press release, I'm sure all of you have had an access to go through this press release. Immediately after this session, we will definitely share with you this entire press release. But to show to you about these changes that have happened, let me just take a quick look into this into this press release. I will share the screen for the benefit of the audience here. So as you could see from the presentation here, right, UHT milk, paneer, pizza bread, kakra roti or chapati, the rate of tax has been made completely nil. With respect to parota or whatever name it is called, whether it is in the North Indian style or the South Indian style, whatever name I call it as, paratha, now it's a nil rate of tax. These items like condensed milk, butter, cheese, which are all taxed at the rate of 12%, now has been changed to 5%. The list is fully huge. Dates, figs, pineapple, see, all these things, dried, any other food preparations, all those things, other food preparations. So these were items which were taxed at 18%. These have also been now reduced to 5% because generally any other food preparation was a very higher rate of tax. Cakes, pastry items, biscuits, all the marigold, the bourbon that you eat are now also getting coming to a lower rate. Right? Soups, ice creams, food preparations not elsewhere specified. So any food preparation for that matter is now coming to a lower rate, right? So all these things are now a very, very beneficial one. The only item that went from 18% to 40% is with respect to non-alcoholic beverages. Alcoholic beverages is not anyway subjected to GST. Non-alcoholic beverages, yes, there was a distinction between whether it was an aerated drink or a non-aerated drink. That is, your Maaza was subjected to a different rate and your Coca-Cola was subjected to a different rate. Now everything is now going into a blanket rate of 40%. With respect to 28%, it was all about pan masala, caffeinated beverages, all the tins which contain caffeine. These are also now taxed at a rate of 40%. So it is only these very specific items which are now taken as sin goods and now taxed at a very high rate of 40%. Previously, did we have a rate of tax at 40% under GST? Yes, no. Not directly under GST. GST rate was 28%, but the compensation cess was at 12%. Therefore, the effective rate of tax on multiple items was already at 40%. Now as well, all under 40% under GST. Because of all being brought under GST, cross utilization of ITC could all be possible, because previously compensation cess could only be adjusted only against that same line item. So very similarly, when I go back to the presentation, there is a change with respect to the renewable energy sector. So with respect to the renewable energy sector, the rate of tax has been very, very beneficially reduced. So whether it is with respect to the solar plant or the windmill, solar cookers, solar water heater, any of that, now the rate of tax which was all hitherto at 12% now reduced to 5%. Textile sector has been given a very major relief. So for almost 40 items, the rate of tax has been reduced from 12% to 5%. For 5 items, that is particularly with respect to man-made fibers, the rate of tax has been reduced from 18% to 5%. And for apparels and other articles of textiles, now there is no change in the rate of tax, which were already taxed at 5%, now also at 5%. The amount up to 2,500 rupees of garments, of apparels, of articles, then it shall be taxed at the rate of 5%. So this has given a very huge relief to the entire textile segment, which is now getting a very huge benefit. Education sector, sharpeners, erasers have all been now made nil. Maps, all those things that a student actually uses have all been stationary items, have now been made nil or substantially reduced with respect to the rate of tax. Common man items, I should definitely show these list of common man items. So common man items has been common man items, consumer electronics, where the rate of tax has been reduced from 28% to 18%. Dishwashers, air conditioners have all been reduced. These have been very, very substantially beneficial items for the entire trade and industry at large. So to very quickly show to the member audience, so this is agricultural goods have been, there have been a very huge line of articles, right? Now education, common man items, tooth powder, candles, safety matches, feeding bottles, nipples of feeding bottles, handbags, tableware of wood, umbrellas, parts, trimmings and accessories of 6601, that is umbrellas, tableware, kitchenware, toilet articles of porcelain or of China, sewing needles, kerosene burners, table, kitchen or other household articles of iron and steel, utensils, sewing machines, book sewing machines, bicycles, parts of bicycles, furniture made of bamboo, cane or rattan, hurricane lanterns, combs, napkins for babies, clinical diapers, all these things, which were all taxed at 12%, now made to 5%, right? 18% to 5%. Talcum powder, the face powder, hair oil, shampoo, toothpaste, dental floss, shaving cream, toilet soap in the form of bars. One important aspect to note here is that liquid soap, the rate of tax has not been reduced, but with respect to toilet soap in the form of bars, So your hammam soap, if you buy it as a packet, a toilet soap bar, then the rate of tax is lower. But whereas if you buy a liquid soap, the rate of tax is still not yet reduced. So these are some very small things which people will have to understand. But we will still await the rate notification. Cakes, molds, pieces or shapes, toothbrushes including dental plate brushes. So all these things, 18% was the effective rate of tax. All now brought to 5%. All now brought to 5%. Very substantial rate reduction for the common man. Consumer electronics, your AC, dishwashing machines, household and others, TV sets, monitors and projectors, all these things have also been now substantially reduced, right? Next thing that I would like to show for our member audience is with respect to the import for dutiable goods. Dutiable articles for personal use, whatever was imported was earlier taxed at 28%, now changed to 18%. Then with respect to the footwear sector as well, earlier what was above 1,000 now changed to 2,500 rupees. So above 2,500 only it is taxed at the rate of 12%. Above 2,500 it is at 18%. For all other things less than 2,500, all reduced to the rate of 5%, right? So these are some of the important segments that we wanted to really share with our member audience. And not just this. Today, as we discuss about GST 2.0, we are also extremely very happy. We are also very happy to inform the members that Zentax Clinic is now coming out with Zentax 3.0. Zentax 3.0 will be a new era in GST notice management. For notice management, you will have a completely seamless, a great experience for GST notice management. You will be able to get solutions for GST litigation. You will be able to monitor your compliances of GSTR 1 and 3B, view all the cases for any particular GST numbers. All the notices can be downloaded directly. So we will keep you informed about the new GST portal of Zentax, which we call it as Zentax 3.0. So on this very momentous occasion where we discuss the part of GST 2.0, we are happy to inform our August audience about GST 3.0, which we would definitely demonstrate during the next part of Zentax talks, wherein we would be discussing about the remaining aspects of this GST Council recommendations. There has been a change with respect to the intermediary services. There has been a lot of changes on the services with respect to the rate of tax on services. There has been some services for which the rate of tax has been reduced. There has been some services for which the rate of tax has been increased. Very particularly with respect to job work. With respect to job work, there has been an increase in the GST rates, and that is also something which is very important for the industry to note and observe. So very many changes are there which are still not yet discussed. This being only part 1 of the session, we reserve a part of the discussion for part 2 of our session, which will be handled next week. And we have a very expert speaker to discuss about part 2 of the session, wherein we will also demonstrate about the functioning aspects of Zentax 3.0. So to very quickly take on a very few questions, there has been a very great support for this session. There has been extremely very great support for this session. The audience for this session has been one of the very highest for across all the sessions. And we are very happy to inform all the August audience that Zentax talks across all these 88 sessions have benefited more than 6,000 individual participants. Without taking into account all the repeat participants, we have had more than 6,000 participants who have benefited out of these Zentax talk session. And we look forward to all your participation in all the upcoming sessions, which is the greatest motivator for us to keep going. So Zentax talks across all these 88 sessions. So this has not been a small number, and this has not been possible without your own continued support. So to take a very few questions very quickly, is there any change in the manpower supply billing? Sir, all the service related questions, we will take it up in the session tomorrow. In light of the revised GST rates coming into effect from 22/9, kindly confirm whether it is necessary to determine the closing stock as on 21/9. Sir, practically, yes. Is there a statutory requirement to submit to the government about what is the stock holding as on that date? No. So there is no requirement to submit to the stock about what is the stock holding on the date, but definitely it might be a question which might be posed at any later point in time. Therefore, stock records are a mandatory process in the law for what each company should need to maintain. Therefore, it is extremely very important that it is maintained. What will happen if the customer requests for a refund of the advance so as to get the benefit of the reduced rate? Sir, yes, practically that could happen. The customer has given you an advance, you have not supplied, you have not raised an invoice. Yes, you can give back the amount as refund and that will still not be a problem as such. We are making an interstate purchase from a supplier based in Maharashtra. The supplier will raise the invoice on 20th of September 2025, but we will receive the goods after 22nd of September 2025. If the GST rate changes comes with effect from September 2025, which GST rate should be applicable in our case? The rate before the change, the new rate applicable, right? So with respect to the specific rate, Rajagopal sir, we would like to clarify that if the invoice is raised on 20th of September and the goods are also supplied during the 20th of September, then only the old rate will be applicable irrespective of the date of payment, because two events have happened before the change in rate and therefore only the old rate will be applicable, even considering the fact that we are receiving the goods only on the 22nd of September. If the nominal advance was received before 22nd of September, but the invoice is issued after 22nd, right? So the goods are also supplied after 22nd, the invoice is also issued after 22nd. Even if a nominal advance was received before 22nd, does not impact, only the new rate will be applicable. Hope this clarifies your question, Selvaraj sir. Balasubramaniam sir, whether labor charges now billed at 12% to be billed at 5% from 22/9, or this rate reduction applicable only for goods? Sir, with respect to labor charges as well, see, particularly with respect to job work, there has been an increase in the rate. So that new rate will be applicable for all those supplies which are applicable after the change in rate. For all supplies before the change in rate, invoice before 21st, so that the new, old rate of 12% only will be applicable. What is a caffeinated beverage, sir? Sir, there are multivarious tin drinks that I could say, which are having caffeine, which are having caffeine in it. So those would be called as caffeinated beverages. Arabian pulpy juice, what is the effect? It was 12%. Now, what is the tax rate? Sir, Arabian pulpy juice, maybe I will just definitely check on that particular item and then let you know. Maybe you can send us a mail to solutions@zentaxclinic.com. So I will just share the email ID immediately over here so that people can share your questions to the mail ID so that we can immediately clarify, right? Santosh, you can also put it in the chat box about the rate of tax, our email ID. Our email ID will be made available to you in the chat box now immediately, right? Ready-made garments, if more than 1,000 would be 12%, below 1,000 would be 5%. What is the effect? Now it is 2,500, sir. Haridayalan, sir. Now, earlier it was 1,000 rupees. Now it is 2,500 rupees. So a price garment say rupees 1,500. Earlier it was at 12%. Now it is reduced to 5%. Job work rate now 12%. Is it raised to 18%? Yes, sir. It is raised to, yes, it is definitely raised to 18%. With respect to car, right? So with respect to car, I had not touched that aspect of things because transportation to that extent had been a very large subject matter of discussion. I had not touched the rate of tax with respect to car because less than 1,500 cc, less than 4,000 millimeters, the rate of tax is different, and above that, the rate of tax is different. Even in all categories, we can definitely let you know that there is a benefit to the trade and industry at large. Therefore, we will definitely take it up in the part of the next session. Poultry equipments. So all these specific line items, which we will definitely take it up during separately, please, because Karthikeyan sir, if you can A Karthikeyan. So there has been multiple Karthikeyans during today's session. Yes, Karthikeyan sir and A Karthikeyan sir. So A Karthikeyan sir, you can just send us your question personally to us on our email so that we will definitely check and revert to you. Post-sales discount credit note, yes, intermediary changes. Post-sales discount, there are changes. There is a delinking from the invoice, and all those aspects are also coming as a result of this 56 GST Council changes, which we would definitely discuss in the forthcoming session, because those are not changes for which you need to take an action today. Those changes also come into effect from the 22nd of November or at a later 22nd of September or after a future date from the amendment in the GST Act. Therefore, we will await those amendments. Whatever was very important for today's date, we are clarified. But amendment to the credit notes, delinking to the invoices is now a very major aspect of things. Footwear sales less than 2,500, then means MRP is 2,600. I discount to 2,400, then 5%. Yes, sir, it is based on the value of supply, not based on the MRP which is printed. What happens to cess, sir? Can we shift it to tax? No, you cannot shift the cess input tax rate to tax. That is why you need to plan for it. Prakash Kodihalli, sir, Ranappa, sir. So, if you have a very specific question on how to structure this, move the cess to tax, please do get in touch with our expert team. We would be really very glad to support you on this. Any change in section 17 subsection 5 block credit? No, sir. We do not see an immediate change in section 17 subsection 5 block credit, Sriram, sir. Can we claim refund on when 12% reduced to nil rate? No, sir, we cannot claim a refund when 12% rate of goods changed to nil rate. Existing MRP in my billing module for the items for which tax reduced items and my stock in hand. Sir, when in my ERP I have an existing MRP, I need to update my ERP with the new MRP if I am going to change my MRP. But is it mandatory to change my MRP? Not really, because anti-profiteering does not really apply. But still, as part of responsible business, we definitely urge that businesses pass on the benefit of this GST rate to the end consumers. Whether IDS is applicable when 20% comes to nil, Surya Narayanan, sir? No. When 12% becomes nil, you will have to reverse that input tax rate because it is treated as an exempted supply. What about job work owned by others? So, KP Selango, sir, maybe I will understand that question a little bit better to answer that question. Stock of non-alcoholic beverages before 22nd, but retail sale happening after 22nd. Sir, I have already purchased before 22nd. Sale is after 22nd. Then I will sell at the new rate of 40% GST. So, transport industry, yes, sir, making 2 invoices for the first 23 days and second invoice, Ashwin, that makes a logical sense. So, GST rate for lithium battery imported, sir, for specific goods, we will definitely look into the rate notifications once it comes into effect and then let you all know. So, a lot of still questions remaining, but we really have to close by this time. We generally close by 4 p.m. We have now extended the session by a long time. Now, a lot of still questions still remain. No changes with respect to reverse charge mechanism. So, we thank each one of you for your very enthusiastic participation and look forward to your active participation in the forthcoming session as well. We wholeheartedly thank each one of you for your participation. Thank you, everyone.